Tech has been a significant outperformer. They've been, quite a few of them have been over-earners, right? They're taking significant market share as the migration of workloads from on-premise to the cloud is gaining in significance. For the most part, the hyperscalers, right, the Amazon Web Services and the Azures, Google Cloud, will continue to take workloads from on-premise. All of that said, if you aggregate the communication sector as well as technology within our benchmark and other benchmarks, you're approaching 50%. And what I would suggest is Margaret and I remember the late 90s. We are taking a more maybe cautious approach to committing more capital within tech. We are applying a more cautious approach to tech, just given the sheer size of the outperformance. And we're not huge believers in mean reversion, but there are elements of tech that we would suggest are quite a bit more expensive than their growth rates would indicate. The things that helped performance in the quarter were some of the things that were, generally speaking, underperformers in the first quarter and late last year. So parts of communications, including Facebook and Disney, some of our better retailers, so things like Costco, things like Home Depot, significantly outperformed in the quarter. You've seen a significant flight to quality, especially in retailing. The other parts of the market that probably hurt a bit would have been energy, for sure. This has been obviously a maligned sector. Parts of technology also that are going through a business or financial transition. So Palo Alto, Nutanix, two significant underperformers in the quarter. And again, these two names are going through a financial renaissance of changing from a license model to a subscription model, and that takes time. It's not elegant, but the end goal is significant, as you can lock your clients down for much longer. Margaret and I are trying to reconcile the market making all-time highs with tangible data points suggesting that there's an activity pause. So Aero Electronics, BASF, largest chemical company, FedEx, Fastenal, in our mind, are all leading indicators of a pause in activity. This would suggest that with the political climate, with the tariff climate, an unpredictable president, that the CEOs and the CFOs are taking a more cautious wait-and-see approach. On the offset, you have a fairly aggressive Fed, as well as other central bankers like Draghi in the EU, suggesting they're going to continue to hit this slowdown with more stimulus. There's just too much confusion and volatility in the system. These companies that I mentioned are leading indicators. And so that's what Margaret and I are trying to do, is reconcile the market making new highs with many data points suggesting that we have probably a growth scare in our immediate future.